you, Ryan. We'll see if I can figure out. There we go. Okay, perfect. I'll introduce myself real quick a little bit. My name's Peyton Carlile, like Ryan mentioned. I am from Farmington, Utah. So that picture up in the left corner is my cute family. It's a couple years old, so my husband isn't in the picture, but I graduated from Utah State University in May of 2020, so just 2.5 years ago. And that's my cousin in the picture. We graduated with the same degree at the same time, so it was a lot of fun. And then after I graduated, I started working at Zions Bank in Salt Lake City. So I did their banker development program for a year, which is a program for recent college graduates to do. It gave me the opportunity to spend like a few months in kind of classroom training on the job and then do rotations with different areas in the bank, which I found to be super beneficial and allowed me to get to know a lot of people within the company and kind of figure out which area I was most interested in. And so I did rotations with the commercial real estate group at Zions, the private banking team, and the commercial and industrial group, which does loans to like middle market size businesses. I think that's like up to 60 million in revenue approximately. But that number could be wrong. It's been a while. And after I finished my rotational program, I applied for an open position on the real estate banking group team as a portfolio manager and did some interviews and was accepted into that. And I have been with that team for 2.5 years, or for 1.5 years since then now. I married my cute husband last year. We love to travel and we've gotten into snowshoeing recently. I got some snowshoes for Christmas and I have the blisters to prove it. So it's been a good winter for it. And then this is a picture of us at a Utah State game, which I put up there because I just started the Utah State Online MBA program this January. So I'm doing that now. Okay. We'll see if that video will work, I guess, when we get to it. So kind of wanted to give you a broad overview of the banking industry and what we do. Probably the side of banking that you're familiar with is the retail side, where you've like gone into branches and made deposits or withdrawn cash, right? And that side of banking is super important. That's where we get money that we then deploy out and lend on the other side. And so that's the side that I work on, is the side that's issuing loans to businesses or to individuals. And it's really the difference between what we make on loans and our cost of having deposits and having all of our employees in the bank. That is the profit of a bank generally. So I kind of wanted to talk a little bit about the importance of banking for society. So you guys are probably familiar with some of these things, but we'll just kind of go through a little bit of them. So banks help us to earn or receive a credit score, right? We are able to access credit because of banks. So how many of you have credit cards? If you'll raise your hand. Good, a lot of you. That's good because that helps you to start to learn how to handle credit and build a track record that helps so that someday when you go to get a home loan, they'll approve it for you because you've got a history of paying your credit cards. How about car loans? Anybody have those? Maybe a few. Okay, a little less. Anybody have a mortgage? I know you guys are fairly young. One. Okay, sweet. Yeah. So building credit allows you to get to that stage where as you need access to more money, you're able to access it. And banks facilitate and help with that. They are going to report to credit unions whether you're making your payments on time and how long accounts have been open, etc. So next thing that banks do is provide liquidity in the market. I'm curious if any of you ever had a regularly paying job that you got a hard check for and you actually had to like deposit with an app or take into the bank, or has it all been direct deposit? Okay, handful of you still had to do that. I had to, I can think, well, it's not a regularly scheduled job, but babysitting, mowing lawns, those types of things, you might have actually gotten a physical check. But most companies now, at least if they're large enough, I guess, do direct deposit, and you don't even have to go to the bank. Your money just shows up in your account, right? And that's access to liquidity that we can get our money fairly quickly to our account and then be able to trade that money for the goods and services that we need, right? And banks help with that. So third thing I wanted to talk about is capital. So banks allow us to borrow money that we don't have from those that do have it and aren't currently using it. So anybody in here want to give me like $350,000 for a mortgage? Anybody interested? No takers. Nobody wants to enter into a contract with me. Though that's no surprise, right? But because you all go in and put your deposits in the bank, whatever size they are, those then allow me to go to the bank and enter into a contract with the bank and borrow that money. And I don't have to get like all of you to get together and pool your money and see if we can get to 350,000 so I can buy a home, right? So that's a huge benefit that banks provide to us, and it allows you as well to fairly risklessly put your cash into the financial system and not have to worry about whether or not I'll make my payments. So some of the large banks in Utah are, well, actually, I'm going to go into services a little bit. Oh, no, capital. We didn't talk about capital yet. So, no, we did. Okay, fractional reserve banking. So this is a concept that's a little hard to wrap your mind around at first. So I found this super quick video that will hopefully play. I'll try it in a second. And it explains what fractional reserve banking is. I just think it's a cool concept to be introduced to and wanted to share that with you guys. So let's see. I actually have no idea how to make it work. My laptop isn't showing the same screen, which is weird. Ah, I think nope, didn't figure it out. There we go. Okay. Naturally, these things work at home, but not once you need them to. It could be because I'm not connected to the Wi-Fi, I guess. Well, you can look up fractional reserve banking later. Okay, perfect. Then you can watch the video. So anyway, the gist of it is that fractional reserve banking allows banks to have more money in the money supply. I'm not going to explain it as well as that video would have, but if somebody comes to me with a deposit of $1,000, I as a bank say I have to keep 10% in reserves, I can then take that other $900 that's left and loan it to somebody else who might go purchase something, and then that person comes in and deposits their money to my bank or to a different bank, and over that happens, and $1,000 can become $10,000. That's kind of the summary of it. So what are some services that you guys have been provided by banks or that you know of, maybe your parents have utilized or can think of? Anything? Yeah, perfect. CDs. That's a way to invest your cash with a little bit higher return, right? Anybody else have one? You've probably used deposit accounts. Some other ones, mortgages, right? Auto loans, credit cards. With a bank, you can receive insurance, pay for insurance through banks. There's wealth management services. There's private banking, which is people who are like specifically there for high net worth clients to help with their deposit account needs. And then banks lend on commercial real estate as well, which is the area that I work in. Another thing that banks do is lend to cities. So oftentimes cities are going to need loans as well. And so we have a municipal team that will help cities access lines of credit or loans, depending on what their infrastructure needs are. Something I didn't know that we did until working for the bank is lending to medical personnel. So let's say you just graduated from chiropractic school a couple years ago. You've been working at a practice and you want to buy into the practice. You obviously aren't going to have the cash saved up that you would need to buy into the practice, and you probably still have student loan debt, and we will lend to those types of medical professionals so that they can purchase and enter into a practice. We also have a lot of internal teams that aren't necessarily providing services directly to the public. We have to have people who are working on our websites, right? And making sure that you can access your accounts at any time, because it's a stressful thing if you need to access your account right then and the system's down or your balances aren't showing up correctly. So we have people that are working on all of our technology all the time, both internally and externally. And then we've got finance and accounting teams that are handling the bank's financial statement. You may have learned this before, but bank financial statements are pretty different than most businesses. For us, loans that we've given are going to all show up on our asset side of the balance sheet, and then all of the cash that's on deposits is on our liabilities side of the balance sheet. So kind of opposite of most businesses. We've also got human resources, right, that are helping with our benefits. We've got people who are recruiting for the bank, and then we have internal audit teams that are trying to catch mistakes and errors before regulators do, which we'll talk about a little bit more. Some of the large banks in Utah, Zions Bank, I think, is the largest that's headquartered here. Bank of Utah, Wells Fargo, US Bank, and Chase Bank. So those are some of the big names that you see. Okay. See, slightly delayed. Pointed this way. There we go. Just need to point at these. So the differences from other areas of finance, we do not sell a unique product, right? Money is money wherever money comes from. And so what ways we can differentiate ourselves compared to other people is, or to other competitors, is in our customer service. Are we easy to work with? Are we helpful? We can differentiate ourselves with our technology, our like apps, our websites, and we can differentiate via how we structure a loan, whether that's how long the maturity is or how long it's amortized over, which is like what the payments are calculated based on. And then we can also differentiate ourselves on pricing, but only to an extent, right? Because there's just certain expenses that we have to cover. So another way that it's different, banking is highly regulated. I think it was before 2008, but obviously the financial crisis and all that happened with banks there caused even more regulations to come about. So every year I get assigned a whole bunch of trainings that I have to do to keep up with my regulatory compliance that we all employees of the bank have to take depending on what their role is. So that we are aware of changes to regulations or just staying fresh on regulatory rules and how we have to comply with those. Some other differences I wanted to talk about are the differences between banks and credit unions, because those are often pitted against one another. So banks are for profit, whereas credit unions are nonprofit. The reason for that is because banks have shareholders, so they're owners of banks, whether private or public, and then credit unions are member owned. And along with that, for credit unions, you have to meet certain qualifications to be able to open an account at a credit union. I think like America First, I think their qualification is that you have to be a resident of a certain area, like maybe Utah, maybe they have Idaho in their footprint too, I'm not sure. But for a bank, you just have to have identifying information and be able to open a bank account legally because you're a United States citizen or whatever it is that is required by that bank. They have different regulators as well. So banks are regulated by either the Fed, the FDIC, or the OCC, and credit unions are regulated by the NCUA, which I think is National Credit Union Association or Agency. And then they could also be regulated by a state level agency. Last thing that makes them different is banks get taxed because they're for profit, and credit unions not, because they are nonprofit, they're tax exempt. Okay, so some of the positions available, like I mentioned, there's a ton of positions or tons of teams within the bank, which means that there are also a lot of different positions. But on my team, we have a bit smaller of a smaller number of positions, and so I just kind of wanted to talk about those since that's the area that I'm familiar with. So we have credit analysts. That's going to be often college level entry positions. And so those are often their responsibilities are doing things like collecting financial statements and tax returns from our borrowers. On my team, they also do some financial analysis of borrowers and guarantors, and I'll talk a little bit more about what those are. Portfolio managers, we underwrite loans, so we put together a long document and write about different aspects of a loan. It's kind of like a risk presentation. We also do risk grading to make sure that the bank has adequate reserves based on how risky a loan is. The relationship managers work with the portfolio managers and the credit analysts, and they are typically the most senior person on the team. They have worked in banking for a long time. They've seen a lot, done a lot, and they are the main point of contact for the customer. They're customer facing. They deal with the problems. They have a bit of a sales component to their job because they're going out and trying to find people who need loans and help them pick us to do that loan. We obviously have managers of each of those positions that are usually pretty experienced, and then they often do a lot of review of the work of the people that report to them. And we also have credit administrators. They review our credit presentations and approve loans. Yeah.
In terms of the timeline, how long?
Yeah, so it depends a little bit, and I'll caveat my answer with that this labor market has been super tight while I've been in the workforce. So we've had a lot of turnover. People have moved jobs a lot in the last couple of years. So I think generally credit analyst position would be maybe 3 years, and then portfolio managers is a longer, maybe 10-year period before you would be ready to step into a relationship manager role. But obviously those things can vary based on what experience you've been able to have or what drive you have, what availability there is if a spot opens up. Yeah, go ahead. Yes. Yeah, so I frequently interact with our borrowers. They'll like once the relationship manager has maybe had an initial conversation with them, they bring me into the conversation and say, hey, like what things do we need from them in order to know how to underwrite this loan or to be able to adequately measure the risk. So I get to have a lot of interactions with them. That's one of my favorite parts of the job is getting to meet clients and learn about their businesses and how they got into real estate and what they do. Great question. One other thing I wanted to mention, banks sometimes, did you have a question? Or okay, sorry. Banks sometimes get a bad rep because people are like, oh, they just want to take over your house or your business or whatever the case may be. But if you think about it, banks just do not want that. We are not equipped for that. What we want is to be repaid for cash that we lend, right? That's the business model. It's just get back what we've given out. And an example of that you hear pretty frequently in banking is that of giving a loan to a dairy farm. Have any of you ever worked on a dairy farm or been around a dairy farm? You have? Yeah. My mom grew up on a dairy farm, so my grandpa was a dairy farmer. And thing about cows is you have to milk them every 12 hours, rain or shine, every day, all year. And if we, as a bank, give a loan to a dairy farmer and then they're unable to make payments and default on that loan, we can't they're not going to send me down to milk the cows. I don't know how to milk the cows, even though my grandpa was a dairy farmer. I've never done that. So they can't send us employees down to do that. We have to hire a company to come in and take care of the cows until we can sell the farm and recover the loan that we gave, right? Or whatever it is that is our collateral. So that's kind of an example of why banks do not want to be landlords or business owners. We don't want to own farms, and that's why we try to structure loans very carefully so that the person who's taking the loan will be able to repay that loan based on their income and what that looks like. So a couple of the positions that I've had, like I mentioned, CA and PM, so that's credit analysts and portfolio managers. The reasons that those I feel like have suited me well is that I like writing, I love Excel. Like I mentioned before, I love talking with borrowers and getting to learn about their businesses, and I get a lot of exposure to those things. I get to work with lots of different coworkers based on which loan I'm assigned to. And so that has all been very beneficial to me. Yeah. Mhm, mhm. Yeah. So far, they have all been different. I almost wish that I had one that felt a little bit more of a repeat, because every time I'm like, okay, we're learning new here. And part of that is because things are, I mean, I'm working on retail loans that are a standalone retail building or an entire shopping center, or it's a hotel, or it's an apartment building, or it's student housing, and they're all in different locations, which have different markets and different needs. Some of them are construction, some of them are like long-term loans. Sometimes they're buying a property or they're refinancing a property they've already owned for a long time. So there are a lot of variances and differences, and I definitely have a ways to go before I start to feel like they're repeating. And even sometimes I'm like, oh man, I did this once before, but it's been a year and a half and I've seen too many other deals since then, and it's a little harder to remember. So yeah, it keeps me very much on my toes and learning and engaged, at least so far. I'm sure maybe in 20 years I'll be like, oh yeah, I can do it all with my eyes closed, but not yet. So good question. Hmm. One other thing I wanted to mention is how Zion suits me. I feel like I love being at a place that has a really good work-life balance. It's pretty darn rare that I have ever felt like I needed to work more than 40 hours. And even when I felt like I needed to, my boss was like, you don't have to if you can't, like, just do what you can do. And so that's really great. They give a lot of flexibility. I've been able to help at various Utah State events or at other events for Zions or unrelated to Zions, and my team is always like, yeah, go have fun, go talk to a class at Utah State for the day. I'm like, awesome, I will do that. And it gives me a lot of good opportunities to get out and to meet new people and network. Yeah, go ahead. Yes, I do. So during COVID, which is when I started, we were 100% remote. So I did everything remotely. And that's totally doable to do my job remotely. There's obviously a benefit to being with my coworkers. So right now, what our team has us doing is Tuesday through Thursday in the office, and Monday and Friday we work from home. And then that's generally the rule. There's a few people who are 100% remote or who just come in 2 days a week, but it just depends on that person's unique situation. So, but there's a lot of flexibility for me to be able to say, hey, like, I have somebody that's coming by to fix the AC today. I need to work from home or need to work from home for part of the day. And my team's pretty flexible with that. And I like that. I have that flexibility. Yeah. Yeah. So I have gotten to help actually with some of the interviews for the Bank for Development program since I've joined the bank. And so I've gotten to see some contrasting things. And I mean, I'm biased because I graduated from Utah State, but Utah State students' resumes are clean, they've got good experience, they're coming into interviews prepared, and it's awesome. But those are some of the things that we look for, right? Is how, like, while you were in school, were you taking the opportunities that you're given? Because there's a ton of chances to attend extracurricular events or be on teams or competitions. And are you doing those things or learning from your group projects that you're in? Can you talk to that in an interview? So that's one thing. we look for good communication skills, and that does not equal charisma. There have been people that I've interviewed who are very charismatic, and I'm like, yeah, you make me want to be your friend, but like you're not telling me how you are qualified for this position and why I should hire you. And so we turn them away. You have to be able to accurately communicate your skills and your experience. And then, like I touched on, having a clean resume, make sure that you've had multiple sets of eyes on it, gotten critiques from different people. Sometimes they're going to have different opinions about how you should present your resume, but just make sure it's been through a number of people to take a look at it and give you feedback. Let's see. I guess the last thing that I like about Zions is it's a big company. It's been around for a long time. It feels pretty established and secure, and I think that gives me some peace of mind in my work as well. It may not be like high risk, high reward, but it's definitely has a lot of growth potential, and I can sleep at night knowing that it's not going to go out of business tomorrow or anything. So a little bit about the typical day of work. Like you'd asked me, I usually am doing Mondays and Fridays at home and Tuesday through Thursday in the office. I get on in the morning and I often get emails throughout the day from borrowers. They maybe need to receive a copy of a loan statement that they didn't that got missed in the mail, or they have a question or need something updated on an account. So I might help with that. And then the big component of my job is doing the underwriting of credit presentations. So I kind of wanted to walk you through an example of what that's going to look like. So let me change slides here. Well, I guess, yeah, the other things, I have meetings with borrowers or meetings with my team members, and then I get to go on client visits and talk through what their deposit accounts are like, what they might have as lending opportunities, and I really enjoy getting to do those. So a credit presentation is going to contain these things. Loan structure, you're going to talk about that. You're going to talk about the borrower, your relationship with the sponsor, and I'll go into all of this a little bit more in a second. You're going to talk about the collateral on the loan, who the tenants are, and then if it's being built, who's the general contractor, what's the budget like, and then strengths and weaknesses of the loan, and kind of mitigating those weaknesses, often with the strengths, to talk about why it's okay for us to issue a loan to that person. So I'm going to define a couple of terms that confuse me at first. So borrowers for us are often single asset entities that only own one building. They probably only have one loan on the building. So for example, let's say I own Campus Corner. That might be my borrower is Campus Corner LLC, a single asset entity. But me, Peyton Carlile, might be the guarantor on that loan. And so I'm the one signing my name saying like, yep, I will pay this loan back. And then Carlile Companies might be the sponsor who the bank has worked with and done multiple loans for all of my other properties that I own around. And those are all, again, going to be held by single asset entities, most likely. So if we were looking at a loan for Campus Corner, we might look at, okay, it's multifamily, so it can be amortized over 30 years, but we're going to do a term of 5 years or 10 years, at which time the borrower would need to refinance and have their financial statements and tax returns looked at and get reappraised so that we can issue a new loan. So in the talking about the relationship with the sponsor, they're going to talk about, okay, when we've had these other loans with Carlile Companies, have they always paid us? Yeah, they've had a good track record. Have they worked through an economic downturn or a blip in their operating? Like, say they had a major tenant move out of one of their properties. Were they able to still make payments? Did they work with us? Were they upfront and honest? Those are the type of things that the bank would look at in issuing that loan to me. Collateral, they're going to look at the building. When was it built? Is it still in good condition? Does it need certain repairs to be done for it to be an effective place for people to live? We'd look at the size of it, maybe compared to other buildings in the other apartment buildings in the area and what the rents are like compared to others. And that kind of helps us to gauge if they're doing all right, you know. Tenants for a multifamily building like that, let's say there's 8 of you that live in Campus Corner. I'm not gonna know all of your names or know what your income is when I'm underwriting the loan, because you're a small proportion of the revenue of the building, right? And there's high enough demand in Logan that if you were to be unable to make payments or to vacate the space, likely it will be filled, no problem, sometime quickly thereafter. So those are some of the mitigants of not knowing the tenants directly, or or even of having a student population, right, that has a lot of high expenses and not always the highest of income. So in a retail building, though, that we have 3 large tenants in, like over on 14th North, I think there's like a Ross and an Old Navy. We're going to do more in-depth analysis on those tenants if we had that property, right? We're going to look at what their sales are like at those stores, or maybe what their financial statements are like if they're a public company, and dive into what their lease is structured like, because that's much higher risk if they were to vacate their space and take away a third of the revenue for that property. So in the example of, yeah, go ahead. Yeah, great question. So our metrics have recently changed, but I think we're at like 65% loan to value on, I don't remember for sure, but yes, we do have percentages that we will loan on based on what it is. So for hospitality, our percentages are usually lower. They have to cover their debt at a higher ratio on hospitality because it's just so risky. It's a cyclical industry, and they don't have a lot of long-term leases in place. Whereas I think like our industrial leases and like metrics that we'll underwrite a loan to are rather higher. We'll do a higher loan to cost or loan to value on those with a smaller margin before they would not be able to cover their debt. And so I look at all of that as I analyze the project too, and look at the appraised value in order to know what size of loan we could reasonably lend on a property. If something is a new build and we're looking at the general contractor, we're going to see if they've done similar projects. Have their projects been completed on time and on budget? Do they have terrible reviews on Google, or are they doing all right? Like, we're going to look at their website. We look at all of that. We look at the project budget, and we make sure that it seems reasonable, like they're accounting for all of the expenses that they will likely have. And then we'll also look at the construction schedule. When's the project supposed to be completed? Does that match what loan term we're lending for the construction, etc. Okay, so take a drink. Next thing I wanted to talk about, and I don't have a slide for this, but is about how I got my job in banking, which, like I mentioned before, is the Banker Development Program, was how I started. So when I was at school, I attended events. They would have like info sessions where different companies would come and present and talk about the positions that they have open for college students after they graduate, and what their company is like, what their positions are like. And so I came to one of the Zions events and met the Banker Development Program manager at the time. She spoke and talked about the program, and I was like, wow, that is exactly what I've been looking for. I'm super interested in that. And I was a senior in college by that point. So I'd done 2 internships, but they weren't at all banking related. I didn't really know much about banking until I came to that info session. And then my internships were with CHG Healthcare. That was my first one. There in Midvale, and I was on their accounts receivable team, helping with kind of like data quality and cleanup. And then my second internship was with New York Life Insurance Company in New York City. And that internship I did QCing, so quality checking of policies that we were issuing. So both of them were super good experiences. I learned a lot from them, even though they were completely not related to banking. I was still able to like take those experiences and say, hey, here's why I could do your banker development program still with what I learned from these. So I came up to the program manager after the info session and I was like, hey, tell me about this. When do I need to apply? I connected with them, stayed in touch, and then when the applications opened, I applied, did a few rounds of interviews, and accepted a position with the team. And so I highly recommend, I mean, I think doing things like this and connecting with the people that you are like, oh, I was interested in the industry that they're in or what they're doing. That's a great way to be able to open doors. It's not very long before you'll be at that place, even though it seems far away. It's just a few years away where you'll be looking for jobs and looking for opportunities, and being able to reach out and even ask somebody questions to narrow down if something is right for you is super beneficial. Okay. Okay, so the most important skills needed for the job, writing is going to be super important. That's what allows you to effectively communicate, whether a project alone is going to be something that the bank would want to do. Being able to communicate both with the borrower about, hey, we need to have your tax returns for the last 3 years. Why do I need to provide you that information? Being able to effectively explain that is important. It's important to be able to explain the covenant requirements that they've agreed to, which is like their agreement to have high enough income that they cover the debt by a certain margin before they would no longer be able to service the debt. It's important to have discipline. There's nobody looking over my shoulder saying, hey, Peyton, you should do that right now, or you should do this right now. And so it's up to me to not procrastinate and to prioritize the things that I have coming up so that I don't end up slowing things down or like having fire drill work that I have to do. Instead, I'm constantly looking ahead and saying, okay, I need to do this at this time or by this date and reach out to this person. And so that's pretty important. Having a sense of drive and wanting to succeed is something that we're going to look for. Attention to detail, being able to pay attention to the errors that you might make in your writing or catch your own number mistakes in your spreadsheets. That's pretty important so that you, like, obviously we're all going to make mistakes still, and things aren't going to be caught as you're changing things frequently, but being on top of that and catching your own mistakes is super helpful. And then being able to do analysis, look at numbers, look at their trends, and provide helpful feedback or commentary on why things are the way that they are is pretty important too. Okay, so I kind of already talked about our typical career path, but my favorite part of the job, like I mentioned, meeting clients. My favorite part of the culture is the work-life balance, that I feel like I can leave when I need to leave to take care of something personal, or not feel like I have to work my whole life. I think that's not the purpose of work. And then my least favorite part of the job is the review processes we go through. So typically when I underwrite a credit presentation, I'm sending it on to the RM, the relationship manager, to review, and then they'll send it back to me and say, hey, here's these things that need to be clarified, or will you add this or change this? And then I'll make those changes, and then I send it to their manager, who reviews it and has the same thing. And so and then it goes to a credit administrator or two after that. And so there's a lot of steps. My team does a pretty good job at not having you make like formatting or like personal preference changes, but really just like zeroing in on things that actually matter. But regardless, sometimes those changes are, you change it to somebody's preference and then the next person wants it changed back to how you originally had it, and that can be kind of frustrating. And then my least favorite part of the culture is that we used to have a little bit more flexibility with work from home, where I could just pick each week which days I was going to be in the office based on what I had going on. And I really liked that. It worked well for me. But I think it was sometimes abused, and so that went away, but not by me. But that's kind of a bummer. But like I said, as long as I ask permission, I can usually still get the flexibility that I need. It's just permission is not required. Okay, covered all of those things. So my advice, if you're interested in the industry, look into rotational programs. Zion's banker development program is great. I've seen a lot of success, not just for myself, but with others that I've seen go through it. But I think a lot of banks offer similar rotational programs, and so they're definitely worth looking into. I know we have an internship that's typically for your junior year that you could do, and a lot of banks have that as well. That would be kind of a way to get your feet wet and see if it's something you're interested in. I think that it's a great career. It's got good growth potential. And then, like I mentioned before, it's not high risk or high reward. You're not going to have to spend 80 hours for your first few years of being a young professional in order to make it. And then, like we talked about, we look for communication skills, clean resume, and extracurricular activities. And then this was my general career life advice, which probably won't play either. We'll see if it will. So Ryan will have to, it'll be out with the slides too when he sends those out. But I'll tell you about this still. I saw this video once. I think it was maybe while I was working in college that somebody showed it to me. Have any of you ever heard of the eat the frog theory or idea? Somebody's nodding, some shaking of heads. So what it means to eat the frog is that you pick the thing on your to-do list or your to-do list that you really don't want to do, that you've been putting off, and you do that first every day. And that's super beneficial because it gives you the chance to like gain some momentum and not procrastinate on the things that just kind of sit there staring at you and waiting to be done. I actually saw a meme that reminded me of this. Just like a couple of weeks ago. Sorry, I'm not used to talking this much. So I need to practice teaching. My voice is going away. Anyway, the meme said something like, I just did the thing that I've been putting off for 16 months and it took me 6 minutes. And I think that sometimes is so true, that something just seems like such a daunting task, but then when we break it down or we just get started on it, we gain momentum and we're able to finish it. And then it makes it that much easier to go into the rest of our tasks. And so it's just kind of the idea that don't procrastinate or put off the thing that you really, really don't want to do. And then, there we go. Please connect with me on LinkedIn if you'd like to. I'd love to stay in touch and be able to see your growth as you go throughout your college experience and into your careers. And then I will open it up to you if you have any questions as well.
Said that you've done some internships and then you knew you wanted to get into banking. How did you know? Not having done those kind of internships, how did you decide on banking, or how did you think that was going to be a good fit?
Yeah, so when the banker development program manager came to Utah State and did that info session, as she talked about the program, I had always known that I wanted to work with businesses and be able to help them with their finances. My grandparents owned a business, but they didn't know how to manage the financial aspect of the business. And so they ended up getting into a lot of debt and using like personal debt instruments to fund the business. And so it didn't work out for them very well. And so having seen that and known that there are ways out there that people can get help and they don't have to be an expert in finances in order to access the education that people that I could have by having gone and studied finance, I wanted to be able to help them so that they could still run all of these great businesses for our economy and our community. And I could help with that, but I had no idea where I was going to find that. I wasn't sure if I would just end up working for one business on their financial team. And then as they came and talked about the banker development program and about how I could work with a whole bunch of different borrowers and help them to receive the financing that they would need in order to run their businesses, or talk about different ideas for ways that they could save or change what their financing need was. That was super interesting to me, and I was like, that fits what I've always wanted to do. So that's kind of how I landed there. Did you have a question as well? Yeah.
Yeah, like you have like 100, they all pass.
Mhm.
Is there a limit you guys can give on?
Yeah, great question. There is a limit somewhere out there, but I don't think we're close to it. It's generally based on like how much deposits we have, but I have sometimes there's limits on like, oh, we have too much exposure to that one client, and so we need to either not lend any more money to them or kind of diversify it by bringing other banks into the loans with them. So that sometimes happens. We'll sometimes have exposure to a market like, okay, we have a lot of multifamily right now, and that's riskier because if something happens to take down multifamily, like the financial crisis did with single family residences, then that's a risk to the bank. So we usually try to mitigate those. I don't know what the dollar amount is of like our total lending amount, but I know it's high and large because I've done loans that are like 100 million to one client. So anyway, that's kind of the idea. Yeah. Hmm. Hmm. So I can't in my position. My position is not a loan approval position. I just look at the risks of a loan and write that document. Then I send it to somebody else who has to make that final call one way or the other. They do, I mean, integrity, we say it at the bank all the time. Integrity is the surest way to be repaid for a loan, right? Like if somebody's going to give up when it's hard and just walk away from a loan and from the commitment, then there's nothing we can do to mitigate against that. And there's if they're willing to stick it out and work hard to repay a loan, then that is way more valuable than anything else. But that's obviously a hard thing to gauge in initial interactions with a person when you haven't seen them be super financially stressed or be in that type of situation. Yeah, good question. I would say it's generally, well, it depends. The credit administrators sometimes don't know the person who's coming for the loan. So if they don't have personal exposure to them, it does make them more hesitant. If they've met that person or have done other loans with them to build kind of a rapport or a track record, then they're going to be more likely to give a loan to somebody that they've worked with before. And so sometimes our credit administrators will be like, man, I wish they'd brought us a smaller one that we could begin to build this relationship with rather than bringing us this huge loan that they couldn't find anybody else big enough to do. And that would be our first one with them. And they're a little more hesitant about something like that. Yeah. You know, it depends a lot. We have different rate or different indexes that will do a loan over. So it can vary even on our own team based on what type of loan they're getting. So a construction loan is usually going to be variable rate. And right now those interest rates are very high, like 1 month Bisbee, 1 month SOFR. Those are pretty high with the spread over that for construction. It depends on the borrower. I would say like right now we're starting maybe 3% and then it can go up from there if it's too risky. If they're a super common client, they might be a little lower than that. But with the risk in the market right now, spreads have widened. They were as low as like 2% when interest rates were really low. Not too far in the past. But so anyway, yeah, there's a lot of factors. I think right now, like retail mortgage rates are like in the 5.5%. I think I've seen that on billboards and stuff. But ours, it just is going to depend on what type of loan. If I think I was looking at a term loan for something that was maybe going to be 6.5%, and construction was looking like 7.50. So very high interest rates compared to what they have been. Anybody else have any questions? Good. Okay.
Okay,
Sweet.
fantastic. Thank you, Peyton.
Yeah, of course.